Hello YouTube, it's your boy the Crazy Trader, and I'm here again with your favorite stock review. Guys, it's been a while since I spoke to you guys. I haven't been myself because I've been sick for a while. I came down with the flu. It's been like 3 weeks and a half. So just in case you hear me cough in the video, it's okay, just make do with me. Today I want to show you my portfolio and then talk about a stock that has dropped very significantly, and I'm hoping that I bring your attention to it. Whatever you want to do with it, it's up to you. Okay, so let's look at my portfolio. I mean, my portfolio is down very huge. Just in the last week, you can see I'm down 2%, and in the last month, look at that, I'm down 12%, $5,000. That's a lot of money, but I'm not too worried about it because I know where my losses are coming from and I know where my gains are coming from, and I know this is the best time for me to average in and buy some more value or growth stocks and dividend stocks that I think are going to do really well. This is the time for me to average in, so that's what I'm going to do if I keep getting money. And right now I don't have much in my account. I don't have much buying power. I'm hoping to get some more buying power and then invest. For a long-term investor like me, I mean, this up and downs don't really they don't really shake me. But if you're a day trader, this is something that you are supposed to be scared about. The market has been really choppy for a while now. But if you're an options trader or a day trader and you know how to trade and you know how to read your technical analysis, then this is the best time for you to make some money. Anyways, let me jump right into the stock that I want to talk about. This stock I got at their IPO. Okay, I just got 4 stocks of it because I love it. I got 4 shares of it, sorry, because I loved it. Robinhood was something I got at the IPO because it was $38, so I got 4 shares of it. And there's been a lot of hate for Robinhood lately, coming from retail investors because of what they did with the AMC and the GME of halting trades. And so people are selling the shares, people are shorting it, and I always say in the long run, a business that has value will always win. A business that doesn't have value won't win. It's like shorting or shorting Apple stocks or shorting Tesla stocks. You might make some profit, but at the long run, they will win in the end of the day, because Robinhood, about 80% to 90% of retail traders that have maybe even moved on to Weibo all came into the game through Robinhood. Personally, I came through the game into Robinhood. I've been studying the market for a while, but I couldn't get into it because commissions were really expensive, and I couldn't get into it until Robinhood came into the market. I was one of the few people who got into Robinhood early, and I was so happy when it was commission free, before all these people jumped on board. So Robinhood is always the initial market that the retail trader will get through before graduating to Weibo or whatever it is. I have TD America. I have a TD America account, but I'm never letting go of my Robinhood account because Robinhood makes it simple, and they make trading simple. They make trading fun. It's more like a game, like people criticize them for. It's more like a game, but the game is what gets you interested in the market. Okay, so Robinhood has dropped significantly, and I'll show you what it has done. It's done very bad. This looks really cool in the past week because there was a sharp rise in it when it fell to $10. Okay, so in the last month, let me show you what 26% drop in the last month. In the last 3 months, 23% in the last 64% in the last 3 months. Okay, 64% drop in the 26% in the last month, 64% in the last 3 months. That's a lot. Let's see in the last year what it has done. 67% down in the last year. Okay, and this is a stock that sold at $38 a share, and then I think it picked let's see the peak, $70, now selling at $12. Is it a time to buy? I don't know, but let me show you something and you decide for yourself if it's a time to buy. When it dropped to $10, a lot of people came in and bought. As soon as it dropped to $10, people realized that the stock is not a $10 stock, so they came in and bought all the way to $12. I'm thinking they are going to push it up to maybe $15, and then it's going to trade sideways for a while, go back down a little bit, and then bounce back up. Okay, that's what I'm thinking. That when I looked at my chart in the Thinkorswim, that's what I think would happen. Okay. Let's look at Robinhood. I own some of the shares. I'm down 55%, as you can see. I'm still going to buy more. I'm hoping that it drops back to $10, and if I have some more buying power, I'm still going to buy some more shares. I'm hoping to get about 200 shares of Robinhood before they can do the rise up. I think it's going to do a rise up. You know what? Every time you go to Robinhood, or anybody that goes to Robinhood, they have this answered questions and answers that you can go look at. Please look at them and read them. They have some interesting views and they have some interesting products that they are bringing into the market. Their crypto wallets is coming into the wallet. You should look at it, okay? Look, read it, and all the questions that shareholders have asked, and then the answers from the CEO and all their CFOs and everybody. Okay, so please go in there and read it. It will give you some good information, and it will tell you that Robinhood is not a $10 or a $12 stock. Okay. Now let's go to Yahoo Finance. Well, I just went to Yahoo Finance just to show you a little bit about the institutional holders. And you know what we talk about institutional holders? We are saying 50 plus holders of that. That's our comfortable side. 50 plus holders. This is 71.10%. So 71.1%, which is a very significant hold. And you can see 74 million from NIA Management, Index 72 million, a lot of institutional holders. And then we have the mutual fund holders, the top mutual fund holders, which is ACK, all the three ACK, Invest. They are ETFs, the ACK ETF, that's Cathy Wood's ETFs. You can have all the top three over here. They all have Robinhood in their portfolio. And they bought about 10 or 13 million about the past week. I think 13 million shares the past week when it went down to $10. So institutional holders are buying into it whilst retail traders are fleeing out of it. So if you're a retail trader, you know what? You can hate the company, but you can't hate the money that they make you. You have to always trade without emotions. There's always something called trading without emotions. So put your emotions aside about hating it. And then if you have to buy, I don't hate them. I love them. Even though they did that GME and AMC bullshit, I love them. I love them because they are bringing some good products, and they are the gateway to new retail traders. Okay, there's a lot of time going. Let me just get right into it. There's a market watch opinion. Here's the bull case for Robinhood stock, but it's not an ideal scenario for everybody. Go there. I'm just giving you the headline so you can go in and read it. I don't want to make this video too long. The longer I talk, the more I cough. So go there, look for this article and read it. It's a good article for you to read it. Okay, if you go to nasdaq.com, you can go and look at the institutional holders again. There's a few updates on there. You can see the ACK Invest Management right there, which says a little bit of updates. They bought 13.9 million shares. That's 141%. They increased their shares. And then there's a Yahoo retail traders build on the market right before stocks rebounded. You also read this, how retail traders are fleeing from this market. But that's the thing, the institutional traders and the hedge funds, this is all their game. This is the game they play. They play the game so retail traders would leave the market, and then they get in at a very low price. Before the retail traders come in, they've already shot up the price. But hey, anyways, because retail traders sold. Look, in a spasm of panic selling early Monday, retail investors offloaded a net of $1.3 billion worth of stock by noon, just on Monday. That's what retail traders are doing. They are running off from the market, and then when they see that it's coming green, they come back in. But at that point, I mean, you are still buying at a loss because you've already sold at a loss, and then you are buying at a green, so you're buying at a loss. Don't do that. Be smart about your market and be smart about what you buy and what you sell. This video is becoming too long, so that's it for today. I'm just bringing your attention to Robinhood. So keep an eye on Robinhood if you're a retail investor. If you're a hedge fund or an institutional holder, stop looking at stop watching my videos. I'm just joking. Anyway, scared money don't make no money, and you always gotta risk it to get the biscuit. I'm out of your hair. Stay blessed and stay safe. Peace.